Good evening, everybody. Mike Vacchi, PrincetonTrader.com, here with your Sunday night evening recap. Sunday night, September 25th, 2013. And we've had a very interesting Sunday opening. We've traded as high, daily chart of the ES here, we've traded as high as 1703.75. We've come about four handles off of that. So, a 21-point gap. And depending on who you talk to, is it Syria? Is it Summers? I tend to think it's a little bit more Syria than Summers, because I don't think that I don't think Larry Summers was going to dismantle everything overnight, and I don't think that Janet Yellen is going to keep the punch bowl out forever. I really don't. I think whatever the plan is, it's going to be in place before Bernanke steps down. And then the plan is going to get executed. And once the plan starts rolling, kind of like the way they've ramped it up, once they start tapering it down, it's going to taper down. So, whatever the reason for the gap, it's a gap. And as a trader that looks at charts, what I want to see, and all I really care about, is whether or not we're going to be able to trade back into the gap. And to be able to trade back into the gap, that is a trade below 1692. So I am not sitting here tonight loading the boat on a swing short, because the market has not demonstrated yet an ability to trade back into the gap. And then likely what it would do would go back and try to retest those highs, make a lower high. Because if this is a reaction high, kind of like the Bin Laden high was way back when. If this is a reaction high, then you're going to get price rejection, and it's going to reverse itself and give you days, if not weeks, to be short, and you'll be fine. The tendency is always to put a lot of pressure on ourselves to come in and want to grab and top tick the market. Okay? I would strongly caution you against doing that tonight. Europe hasn't looked at this. We don't know what tomorrow's going to bring. You've got a Fed meeting this week. So I would be cautious coming in and getting really heavy short. If you want to scalp it short, intraday, fade this move back inside the Bollinger Bands, that's a completely different story. My cautionary tale right now is with respect to saying, okay, we got this gigantic gap. That's got to be the end of it. I'm going to go ahead. I've waited. I've been patient. Look at how much it's gone up since we were at 1638 a few days ago, and now we're up above the Bollinger Band, and I want to short it. Okay, but I would caution you against shorting these kinds of gaps, and I will give everybody one object lesson. So let's rewind the clock back to New Year's Eve. New Year's Eve. And then, the first day of 2013, where we gapped on the debt ceiling, or the whatever expiration of defunding the government, whatever you want to call it. We gapped here, and we never looked back. That's really the only way to put it. If the gap we're experiencing right now is similar to this gap, what you're going to see over the next few days is an inability to trade back inside the gap. In this case, it was an inability to trade back below 1438 quarter. The best we did 4 days later was 1446. And once we made that high, it really was, we were done. We were gone. So, if you're going to go ahead and swing short this right now, or if you already have, if you said, you know what, we're over 1700 on the continuation, I'm shorting it, I don't care. Totally valid strategy. That's fine. I've done that, and I've done it successfully a lot. The one note that I would give you, and the thing I've been telling my people tonight is, look, if you do this, and we're not back below 92 in the next 2 or 3 days, you need to be careful. You need to be careful, and especially on new highs, you need to think about cutting it short, because it could get away from you. So that's the one note I'm going to leave you with tonight. So if you thought I was going to come on tonight and say, all clear, short this market, no. Nope. Now, from the bearish perspective, on the continuation chart, you have a potential double top here. Okay, but that's as of 8:24 p.m. Eastern Time. We'll see what the morning brings, and we'll see what tomorrow brings. If this is truly about Summers and Yellen, then I would expect to see a continuation of this up move, walking it up into the Fed. If that's really what it's about, should walk it up into the Fed. And the other thing I'll show you, this is a daily chart of oil. And when this first happened, when I did my subscriber thing a couple hours ago, I was really leaning hard, saying that this was absolutely the Syria thing with the U.S. and Russia, and maybe it is. But the thing that makes me think maybe this is much more Fed related than Syria related is oil. Oil is pretty much flat. It made a low down 1676. We're now trading 107.33. You have to see how it reacts with the middle band here. Up at 107.55 and see if we can get through. And you just continue to have this long compression in oil. And when this compression breaks one way or the other, you're going to see a $10 oil trade, either up or down. Which way? We don't know. And as long as it's hanging around the middle band, we're not going to know. But when it does break, it's going to move. Okay, so I'll be out in the morning with another webcast. The pivots are attached to this. We're not at a stretched area for pivots. We're only 40 handles above. So we're still basically neutral based upon where we are trading tonight. So follow me on Twitter at Princeton Trader. Sign up for the webinar on Wednesday. We're going to talk about swing trading. And I think we're going to have a lot to talk about by Wednesday in this market with swing trading. I'm about ready to scrap about half the webinar and just sit around and talk about where the market is right now, because that's how important of a day I think Wednesday is going to be. So the webinar sets up very, very well for that. I hope you'll check it out. Okay, have a fantastic night. Pre-market webcast tomorrow. Trade them well.